Hi, everyone, and welcome to the Wealth Club with Weinstock podcast. I'm Stephen Weinstock. I've been investing in real estate for over 20 years, from single family homes to multifamily syndications to launching my own real estate investment fund. But this show isn't about me, it's about operators, founders, and deal makers who are building real results. My guest today is Ira Zlotowitz, founder of GPARENCY, a former co-founder of Eastern Union, and one of the most influential names in commercial mortgage lending. We're going to be doing this a little differently today. I've got a list of powerful, targeted questions covering everything from AI to financing strategy to building a brokerage today. If you're an investor, a founder, or a broker, this episode is going to give you real tactical insight. Ira, thanks for joining me. I'm going to jump right in.
Thank you for having me.
Ira, what was your first real break in commercial lending?
That's a curveball. I try to really look back, and it wasn't so much like a first break. Like I found it was like a bunch of like singles, like little moves that God sent, and it takes you to where you are. I definitely think a major part of it is when I started out the career. I started my career at Meridian Capital, and then this before the technology, before there's data play, there's nothing going on then. You're talking about those public records, it's like people actually went down to the public records to get the notes and read it, see when loans are coming due and things like that. And that was just when the internet was starting and just when people were doing email and marketing and banks were starting to talk about merging together and the laws were changing. And I came, I guess, I guess the break was joining at that timing. And when I came in, and being able to start, I think the biggest change was when I started, I realized that the business was becoming a commodity back then. The level of commodity then and now is a whole different world. But I started hiring telemarketers to call commercial real estate.
I remember back then, I started buying in 2001, and about 2 years later, I started buying private notes, private second mortgages. And I used to go to the county clerk's office in Trenton, New Jersey, and different parts of central Jersey, and literally look for who has a note. Most of it was, Bank of America or Countrywide back then. And then every once in a while, I would see a John Smith, and I would make an offer, 60, 70 cents on the dollar, and try to buy it. Yes, I definitely remember pre-technology.
Yeah, but that was your competitive advantage that you went out to those places. Now every person just picks up the phone, ChatGPT, and they're done. They get the same info.
You recently launched GPARENCY, and I guess you'll dive into that. What's the biggest myth you think investors believe about brokers?
So it's important. I'm going to give the answer, but it's well founded why this myth existed. It's just that it no longer exists. What's the biggest myth that people think today but no longer exists? Actually, I'll give you two answers. One was always, and one no longer exists. The one that no longer exists is that the broker can guarantee you certainty of execution at the closing table. That's the biggest myth. And the best proof is that whether someone uses the most prestigious brokerage firm in the country, or they're going direct, or they're using a fly-by-night mom and pop brokerage, deals have issues before closing, and some deals blow up before closing. At the end of the day, it's about the credit of the deal. If the deal makes sense and the credit is right, the deal's going to close. Can people massage things, work it over, talk to the bank, tell a story? 1,000%. But ultimately, credit makes the decision. 10 years ago, if a mortgage broker did a lot of volume with a specific lender, walked into the lender and said, listen, him as the lender. Let's say, Stephen, it was your deal. You're not going to close with Stephen. We're never showing you another deal. You know what happened? An hour later, no problem, we're going to close. That same broker could be 10 times as big today. And not just today. Go back 2 years ago, also, it started in 2019, 20. Calls up the bank and says, hey, Mr. Bank, if you're not going to close this deal, we're never showing you another deal. You know what the response would be? Lose my number. We're not closing this deal, and we're not closing any deal from you. And the conversation goes off the phone. That's number one. The second myth, and this is the craziest part, is the power of brokers. I spent my time training mortgage brokers. And like one lender told me what's amazing to him is that how a broker owns nothing on either side. They don't own the bank, they don't own the client, and yet they're able to create this aura that they're worth whatever fees in their structure to go to. You have actual owners who believe that it's an insult if they would ever go to their broker. They're scared of the broker. I'm going to shop my broker around my crew. You negotiate your countertops. You don't negotiate the broker. Like, it's the opposite. As a broker, my whole career was, give me a shot. Every mortgage broker was, just give me one shot. A broker, you should want to shop. So the myth is you should be shopping every deal. You should never, ever give an exclusive. Ever. I never took an exclusive, and I never advised someone to give an exclusive ever. You want to give a good faith. It's your deal to lose, all that, but no exclusive. As a mortgage broker. I can't talk about sales brokerage. I have a whole different opinion there. I think they're huge value, each individual sales broker. I'm talking specifically mortgage brokers, and especially into the market we live in today.
Yeah, no, I agree. I feel a little guilty every time another broker calls me up and I entertain their phone call, but I guess that's just natural.
No, but
And
Steve, I can tell you on that point, it's natural to feel that way when you have a relationship with somebody.
yeah,
But what you should be doing is call back the first broker and tell the first broker, you're my first love. It's your deal to lose. Just want to let you know, I'm a fiduciary to my investors. And investors invest in you because they assume, hey, this guy Steve is going to shop it around. You have that fiduciary. But at the same time, you need to balance relationships. So go back to that first broker and say, I'm working with you, but carve out the lenders you want. I got to go somewhere else. Any broker that doesn't let you is a bad broker. There's something wrong. There's something wrong. They're probably getting kickbacks, and who knows what's going on, how they deal with every other relationship that they have there. You want to deal with someone who's able to go ahead and respect that, yes, it's a mutual relationship to be able to go ahead and get that business going.
you recently launched GPARENCY. You've been in the commercial mortgage broker business for a long time, and you're very legendary. You are a legend in the business. Tell us a little about GPARENCY in your own words. What's different about it? And let's hear it from you.
Thanks. So first of all, in the same, if you'd ask me what's the myth about GPARENCY is that clearly when I opened up, everything is God sent, and God decided that I'm going to get the messaging out a certain way. I'm venture backed, and the people who invest in the business, but we believe we could build a Netflix of the industry, Netflix the industry. The mistake that I made, I take full responsibility, is that what I told to the investors, I told to the public. When Netflix opened up, they only spoke about, I'll give you a disc in the mail, I'll charge you a subscription. And then they spoke about streaming. They didn't mention streaming at the beginning. My mistake was I came out and at one time I threw everything at the wall at the same time to the clients. So the clients were thinking, am I technology is going to close your deal? Am I telling you don't need a broker? All mixed messaging were flying. And the brokers were on the defense and they told their clients, you crazy, you're going to go there, you think they're going to close the deal for the same price I could close? There's a whole hodgepodge of wrong information. It took me a long time to fix it. And thank God we're living on the other side of the mountain. We're having this recording here at the end of May. We're doing $250 million a month of business. This month, God willing, 300 million. We found our messaging, we found our problem statement, made it very, very clear focus. There's one problem, there's one solution. I'm not competition to you brokers. I work together with every broker, with every relationship. So here's what I do. Here's the problem that I solve. I'll start with the problem that I solve. 95% of owners, I truly believe the number's 100%, but 95% actually admit that when they go for financing, they're not getting the best finance. They're not getting bad, but there's so many moving parts in commercial real estate. There's no Bloomberg terminal. So whether they go with that lender because it's close enough, or that broker, it's close enough. They have certainty of execution, they have a relationship, so it's good enough. They go with that. Resonates for you? That problem statement, 95% that you're not getting the absolute best, or do you disagree with that a little bit?
Ira, I'll tell you, I'm very impressed that you're admitting to a marketing mistake that you made. I usually don't hear that from anybody. They just, massage and go around it. So it's very interesting to hear you say, we made a marketing mistake. We, told them we would be streaming and not just sending red envelopes in the mail. So I really like that. It's very refreshing to hear that from you. And I do see you're putting out a lot of content out there, and you're definitely marketing GPARENCY, and it has taken our world by storm. So it's definitely an interesting concept. And I'll tell you, I've spoken to some of your guys in the past. I'm on their list, and it's definitely something I definitely have to try it out. So sometime in the next couple of months,
Yeah.
we'll be talking offline.
If I could just, I appreciate it. If I could just like, just the once we opened up the mistake and what the clarity is, and I think really to a lesson to, I guess it's really the lessons people are trying to tell me when I was launching it, but I was so focused what I thought for sure it's going to get to. We call it the Titanic syndrome. When you think it's for sure going to happen, that's when it doesn't, But I think where we found our place is that we call ourselves mortgage assurance brokers. We're the only mortgage brokers that guarantee you the best financing, and you could stay with your broker. So forget about technology. I'm a regular mortgage broker with two differences. I was talking to you offline. I ask other people, why do they use a broker? the number one reason a person uses a broker and should use a broker is to create the competition. So I say the first thing I do that's different is that I stop after you sign the term sheet. So I do everything a mortgage broker does from the beginning through the term sheet, exactly the same. Underwrite the deal, set up the deal, work it, shop. The same me that I was pre-GPARENCY. The second difference is I only charge 4,500. So whether the deal is 300,000, 300 million, doesn't make a difference. So the process, why does it work? How can I guarantee it? It's a process. There's three ingredients that are required to get the best financing. Ingredient number one is your existing relationship has to be motivated to the hilt. So if someone's going direct to the bank, or they're using a broker, they call up that broker and they tell the broker, hey, Mr. Broker, do you want me to go? I'm going, like the first love is yours, but I'm going to GPARENCY also. That broker is going to get off the phone and you tell him you have 5 banks to pick. He's going to focus with his team which 5 to pick, work those banks to the bone, leave no meat, no fat on the bone. Right off the bat, you made back your money. I shop, I'm doing $250 million a month. We're tracking 3,000 lenders, and we use AI only to identify the next 10 to 20 lenders. We shop it there, and then the biggest value is I have no ulterior motive. In real estate, as you know from your whole career, everybody has an ulterior motive. The same me without an ulterior motive is different than the me with an ulterior motive. I'm human. But now I could sit down and tell you how to leverage all the offers to the best. Even if my bank is the best, you go direct, go to your broker, I'm done. I don't have an upsell. So that's my product for $4,500, mortgage insurance broker, guarantee the best financing to do the deal. So yes, it was a far cry from when I opened, discount broker, technology broker. No, I'm a mortgage insurance broker. Stay with your broker. You're someone who uses a broker, stay with him. You're someone who doesn't use a broker, let me shop the market. You're not even sure if you should ever try a broker, $4,500 to try a broker. That's right.
You answered my next question as to why you went flat fee instead of commission. So
That's it.
that,
No ulterior motive. But it's really, really the example I tell them it's half falafel. When I opened, there's one point, it was $11,000. I'll be a whole broker. People couldn't resonate. I'll tell you a marketing thing I learned, which is things that subconsciously we all know, but I saw it in cases that when I was selling, I could be a broker for 11,000. Once someone couldn't fathom how they just did a deal for $20 million and they paid 200,000, I do that for 11, they signed me up, they wouldn't listen to anything I had to say. When I'm coming to you, let me just shop it for 4,500. Oh, that makes sense. Oh, you have to do volume. It makes a lot of sense. 10 hours of work, they understand the story. When they couldn't understand the story, zoned out. Bye. And now that's what I get. I never in my life had inbounds. I started getting inbound calls because people are seeing they could stay with their relationship, don't risk it, and also come here.
yeah, no, definitely. I mean, they're seeing that they could keep their first love with their broker. They could pay a flat fee, and they're bringing other lenders to their broker. So the broker
But
might have a relationship with the 5 lenders, like you mentioned. You have relationships, or you know how to, your company could search hundreds of lenders or thousands of lenders, and you could really, help the client, help the broker do their job. It's really amazing.
I'll tell you an interesting thing. What we found, and most people have the right broker. Right? You're not an idiot. If you had a broker for the last 10 years, you weren't doing the wrong thing. You didn't build your business off. So in most cases, the goal is not to bring them to a new bank. Again, I don't know ulterior motive. When normally the second broker is trying to tell them, your first broker, your first banks are bad. You need a new bank. No, you don't. Create the competition that your first banks and your broker motivate a little bit more. Now, if someone was telling me they deal with this huge mortgage broker, just not to name the person, they say, I deal with this person, he gets me the best rates. I said, no, he doesn't, because you don't shop him. He could get you the best rates if you felt the pressure. The competition gets your broker to work better. So that same, they'll broker is going to use a favor for your deal as opposed to use a favor in someone else's deal. So if I play my cards right, we don't end up going to my new bank. We create the competition so that you stay with your existing lender, which is healthier and better for the borrower and for those lenders.
You mentioned you're using AI for a lot of this. A lot of people, all they know about AI is ChatGPT. If they're lucky, maybe they read about it. A lot of people are not using AI. Sometimes they see the autocomplete in their Google search for AI. I guess tell us how you're using AI and how that's helping GPARENCY and the client.
I will tell you an interesting thing that someone just told me over the weekend. That is a real estate investor. And you talk about ChatGPT, don't diminish it. It's just how they use ChatGPT. This person now is an LP. He says now when he gets a real estate deal from a syndicator, he types in the ChatGPT only once because it remembers you for the next time. It says, I like to invest in multifamily, value add, and tertiary markets, whatever he writes with a return, da, da, da. And then he uploads the deal and he goes, does this match my criteria? And if yes, yes, no. So at least it's starting point. It gives him like a starting point as a level. So it's just interesting how you use it, there. But I'll tell you an interesting thing how we use it. The main part we use, like I was saying before, step 2 of the ingredients is it helps us identify the next lenders. So this is the part that's really fascinating to me. It really makes a difference in the business. Every mortgage broker, every competent mortgage broker, so has a database of the lenders they deal with. And they have a few columns after it with a notes field. So column 1 would mention which states they lend in. Column 2 would minimum loan amount, maximum loan amount, interest rate, so on and so forth. What happens when a lender tells them my minimum loan is 5 million, but if the borrower is very strong, if it's Steve Weinstock, I'll go down to 2. Where do they store that? A note. But if tomorrow they come back and say I have a $2 million loan, it's not going to flag them about that. If the guy's strong, it's not going to flag them. The way AI stores and absorbs data, it could read those notes. When we have in relationships, we have email correspondence with banks on the transaction while they turn a deal down, while they like a deal. All that information is now able to get stored in a way that AI could read it. So when I go into my database, I have a strong borrower with a $2 million loan. It will give me the 12 lenders that lend on that property type at 2 million. Plus, it would say if the guy's really strong, you want to consider this lender because that's what they told us. So it allows us to find that in between, like the nuances, the subtleties that you have to like. It's not scientific; it's artistic somewhere. It gives us that information, and that plays a huge difference. How many times a broker, I should have thought of that bank, I forgot about it. There's no more, I forgot about it.
Yeah, I mean, AI is great, especially with ChatGPT. It all depends on the prompts you give it. The more you give it, the better. I do notice that, at least on the app on the phone, it allows you to talk into it. And when you talk, you could really just ramble and give so many details. So I find myself using it a lot. Just a little story. I'm selling a small little property in New Jersey, in Elizabeth, New Jersey, and I'm not using an attorney on it. And the attorney sent me the contract, and I fed it to ChatGPT and then gave my own prompts. And the attorney writes me back saying, ChatGPT is not really an acceptable method of reviewing contracts. So I actually got on the phone with him, and he said, "Oh, by the way, I use ChatGPT also, but you shouldn't keep all the asterisks, all the default,
They call it the M dashes.
the M
By
dashes."
the way, between me and you, I'm thinking to myself, like, I'm not trying to hide it. So put the M dashes. Like, why are we like putting on a show? Like, just go with it, you know?
So yeah, no, so I told him and he was funny about it. So it was just interesting that he caught me, but I didn't mind being caught.
No, but I'll give you the example. You talk about the legal, I have a brother who's a top attorney, and he stays as a sole practitioner, and people always try to bring him into law firms and work for them. And aside from that, just the quality of life that he wants and he's knowing it, he uses a lot of these like agents and steps and automation because the reality is that what if people I say quotes all the time that I think 80% of jobs are gone because I know AI is never replacing me and you, and I agree, it's not replacing any of us. But when you have someone that could use all the AI tools and now they could double, triple, quadruple their output, the team that had 10 people only now needs 2 or 3. So the 7 weren't replaced by AI. They're replaced by the 3 that can do all the work of 10. So
Great.
those using AI replace those are not. So that's why like that attorney, yes, he reviewed it. He's also saved time, but didn't reflect it as legal fees. I spoke to this, you like this story talking about the AI on the legal side. So from the largest law firms, I was talking to the chairman. He's big into it. It was surprising because he's over 70 and he's into AI. So it's like surprising he really gets it. They invested millions in technology. He says for litigation, the way they use it is it absorbs all the discovery documents because now everything's in WhatsApp and Slack and emails and everything under the sun. While they're doing a deposition, they have an earpiece in the ear, either video cameras on or Google Glass, and while they're talking, it turns around and it says to them while they're having a communication, like in the ear, like ask them about this topic, ask them that property type. It's crazy stuff. This is just like he says, they have to switch how they're going to start pricing things in the law firm because it's not hourly anymore. Like just the world is changing wherever we go.
Yeah, let's talk about first-time investors or early investors. I think a lot of people who are going to be watching this podcast are, people who haven't invested yet, and they're looking to get into it. It seems to be the big audience for podcasts. How should investors vet a lender or a debt broker today?
You talking about the general partner, the person who's controlling the deal, or the investor piece, which the
The
word
the
investor is that's the word investor throws up.
Correct. I meant the
Oh, by the
GP.
way, GPARENCY is GP for general partner and transparency. That's the name.
Got it. Yeah, no, I meant the GP, the person controlling the deal or running the deal, not the LP, not the limited partner.
So I think that as a starting point, and that again, that goes to the same reason, no ulterior motive on the GPARENCY front. So obviously it solves that issue. Your starting point, you have someone who has no ulterior motive that's gonna bring you that information. If you didn't get there with GPARENCY and you're not using GPARENCY, so it's definitely getting references. It's references. And I find that you want to get the references from who they're going to send you and ask the tougher questions. What issues did you have in the problem? When you did have a problem, how they work it through? You want to talk to a few of the lenders they did business with. Did the lenders like them? Sometimes the lender, I hate that guy. I have no choice to do his business, but let me tell you something. When I have a chance to, you want to get the census. I would take your research on the references and on the lenders that do business with. And you're asking questions because everyone has ulterior motives, a lot of money at stake, there's a lot of jealousy, how much money is going on. Like attorneys hate brokers, right? Because they come to the closing table and they did all the work the last few days, and this broker made one phone call. In their mind, maybe they didn't do that much, and they got this fee 10 times what they're making. So you're gonna speak to people, you'll get the flavor for it, and just go with eyes wide open. For the lenders, I mean the same thing. I just think that fortunately or unfortunately, it's very opaque. That's one of the things I want to try to change. But transparency, there's no real way to get that answer resolved and getting a great, like there's no like 5-star rating for a broker and how many deals they really did. But it's your gut. Who do you feel comfortable with? Checking some references and knowing that no matter where you go, you're gonna have bumps in the road. And you can't compare apples to apples because every deal is unique and every person's unique. So when something blew up, you don't know why it blew up. And that's how it's a tough question.
What's the most overlooked part of the capital stack or the financing stack by first-time investors, in your opinion?
So I think that what I think overlooked, and this is where I spent millions and millions of dollars building it. We have it on a desktop. We just released it into an app. Is that many investors bifurcate their equity and their debt. That's not true. It's one thing. There's a capital stack. Use the word. It's capital stack. It's 100%. You want to look at every single deal. Ultimately, you're playing for the most part to an IRR, whatever your metric is. That's what you want to look at. So when someone comes to me and says, I want the maximum loan I could get I don't care if I'm paying a higher rate, right? And I'm talking to this person on the phone. I ask them, just curious, by the way, what's your deal with your investors? Because I have a very good deal with my investors. I just have a split. I said, is there any pref? He says, no, there's no pref. So I said, why do you want the highest loan? Because everyone tells me I should get. I said, you're an idiot. I said, if interest rates are for a low leverage deal of 5% and a full leverage deal is 6%, and if you're getting high leverage, you're going to 7%, why are you paying that extra 2%? It affects your IRR. It affects your personal return. Wouldn't you rather do the loan at a 5% and the rest of it, you're not paying a pref on it anyway? Or no, meaning look at it and you can play with the calculator, which one works better for you. If you're paying your investors, another person tells me, I want to get a loan the lowest leverage. I want the lowest rate. Why? You're paying a pref of 8% for the difference. Wouldn't you rather get a higher money at 7%? It's cheaper than your pref. So people don't look at the whole capital stack. And there's no real good tool out there. So we built a tool, an underwriting calculator. It's on our website. That if you go to the GPARENCY's website, at the bottom, it's a free tool. A thing called MapHub, or in the App Store, there's an app for it. You can underwrite a deal literally in 3 minutes. Plug in what your purchase price is, how you split your investors are, what your waterfalls are, and that's what you want to play to. You want to make sure you're playing to your IRR if that's your number. Don't bifurcate the two things. Public opinion is to go floaters, non-floaters. It's about your deal. Take a step back holistically and look at everything.
Yeah, definitely words of wisdom over there. You know, somebody who's doing this a while, there's so many different aspects, and you know, I've changed strategies over time. And am I better off raising as much as possible or getting the lowest leverage? But yeah, it's definitely I think an ever-changing game. Every deal is different. Sometimes floating debt works. Sometimes it doesn't.
Well,
Um,
listen, I wanted to tell to certain people, like, what people are scarred with in the past is not really relevant anymore. Meaning, not anymore. Meaning, right now, when rates are 2-3%, everyone was saying for years, as you know, rates are going to go up, rates are going to go up, rates are going to. It's been so long it's going to stay this way, right? And then they got messed up with floaters. But when rates are where they are now, and for the most part, the belief is it's going to stay where it is / go down. Float is not the end of the world.
I agree.
5 year money is not the end of the world. So people have to readjust. Don't go with this. Oh, I met someone who got burnt because what market was that in? Where did he feel his rates were going? His rents were going. Like there's different risks rewards in each new market.
Correct. I mean, bridge debt these days is very popular because people are saying, if it pencils in today, the chances of it going up are pretty slim. Chances of it going down is optimistically very hopeful. and people really think it's going to go down eventually, or at least not go up. If it does go down, the deal becomes a home run if you're able to pencil the deal in today. Is there still room for creativity in financing, or is it really just about the rates of the structure?
The creativity was never about the rates and the structure. The creativity was a little bit going back to what I was saying before. If you're looking at everything holistically, the creativity is, hey, it might make sense for this deal to take a low leverage from a bank that's willing to give the lowest pricing today when you're going 65% and take a mezzanine loan, and the blended rate works out to blank, which is better for you how you structure your from the IRR perspective. So that's where the creativity is in this market, and that always existed, that level of creativity. The difference is there's less of the options overall, but that concept still applies in a very big way today. So you have certain people deciding, hey, it's worth for me to go to a debt fund. They'll give up to 90% leverage at a blended rate of blank, and based on how much now I have to raise, first I could buy this building. I only have the ability to raise 10 million. That's all I need. Sometimes it's no. Based on the structure, if I do it this way, and I think I'm selling out the deal within 2 years, from an IRR perspective, this is better. So the creativity is not so much it's a holistic creativity. It's again, but it starts, you have to fully understand what you want to get to, and also have the math in front of you. So many times, that's why we built out this tool, because I'm meeting people, the most sophisticated people. They don't know how to talk the talk, but who's putting that action in a spreadsheet? They can't do it on the fly. So they're waiting to come back to the office and give it to our analyst who's going to take 2 days to get them all the scenarios back. Can you imagine while you're talking to somebody who can play with those scenarios, the interest only piece, how it works, how the equity multiplier, that's where the creativity comes in. But that's gonna be the same for everyone.
Yeah, when I started buying smaller assets in New Jersey in '01, '02, I was doing a lot of creative financing. My first deal, I was able to put down 10% to get a loan. Back then, it was, getting an 80% loan, a 10% loan, and, putting, let's say, 10% down on a three-family house. But I quickly pivoted to a lot of seller financing, a lot of seller seconds, sometimes a seller first. And I took that creativity aspect even to my multifamily. I bought a 102 unit property in Cleveland, Ohio, about 3 years ago, and I was able to get the seller to sort of hold paper, so to speak. It wasn't traditional with a second lien or anything, but he stayed in the deal, and I used my previous experience by always asking for the seller to stay in the deal somehow, and use that to my advantage when raising capital. So creativity is really great.
100%. So that those things you're describing always existed, will always exist. The difference is what level the metric is, and what are new prefs people. I have to reset those numbers, but yeah, that's always going to exist the same. Beyond that, there's no that to say better, yeah, that's always going to exist. That direction will always exist.
Okay, we're going to end in a minute or so. I just have a question. You've been in the business a while. You've seen some success or a lot of success. You're definitely legendary in our world. What keeps you motivated at this stage of your career?
First of all, thank you for the compliment. The two things that keep me motivated is one is I have a passion to be able to help and give back. And I see so many people that are really getting well, how could you check out the right broker? And the people not getting the best financing, they think they're getting the best financing. The whole industry is like a revolutionizing of the industry to be able to get it where they make it efficient, be able to help people. And that's the foundation of GPARENCY's model. Ultimately, the goal is to get to a point where not just when they come to an acquisition, how can I provide you that tool to make sure that when your eyes wide open, when you have all the tools you need to make sure you're not going to take advantage of. And if you make a decision, it's because you made a decision. It's worth the risk to buy that note, to buy that property, and not because someone you didn't know enough information. So the transparency across the board for the GP, from time he gets looked at a deal to look at to the whole type financing. But it's really, what do you want to do with the money afterward? It's what's the goal? You raise the money here. God decides that this is on the right trajectory, keep going this way. And as mentioned, you were launching a new business in the next couple of weeks, a spinoff from GPARENCY, where we're going to allow the placers, calling it G Placer. We're going to give all the data and tools for those doing placement, whether you're a mortgage broker or whether you're the in-house team. You're in charge of placement, giving you all the bank information, all the same data that we're using to GPARENCY do their work. If you want to do it yourself, how can I give those tools? And the end of the movie goal is I'd like to be able to go give back and create in the rest of the world, there's Facebook and there's TikTok and there's all different social media platforms, and at different segments of the Orthodox Jewish world, it's not there because it's just certain levels of sensitivities that they want to have to different things that they do. So I was fortunate enough to build out an app. Remember my dad, a site, go daven for the time Minyanim come in. I found the person down, upgraded the technology. My goal is to build a one Jewish app from cradle to grave and everything in between. Like, why is it that when you fundraising, everyone has to donate to a bunch of different platforms that exist? Why can't one person build one platform for $500,000 and give it to every organization? Why can't it be one thing like an Uber technology for chesed, for rides and doing good deeds? Having one end-to-end type of thing for matchmaking, for shidduch, everything along the line, that's the vision to get there. So that's the drive. If I get there, I think that, hopefully it's up to God if he decides that I do my thing, it happens. I tell people that the blessing, the thing I pray for the most now is that the humility and the even clearer realization of that, it's all on God's hands. As success picks up, I still remember that. So if someone's listening to this podcast in 2030 and they think it's not the same thing, send me a message, say, Ira, I listen to you in 2025. Let me tell you something. You're not that same guy. I better be the same guy. That's the goal.
Ira, you mentioned GPlacer earlier offline. Tell me a little about GPlacer.
So GPlacer, as we find that as we're going out into the market, there's two types of people that are not being serviced within the brand of GPARENCY. It's like when GPARENCY's brand is not a competition to a broker. So when I meet somebody, my vision is I'd like to be able to be involved in every financing in the country. So there's three types of owners. There's an owner that uses a broker, whoever they use. If they want a full-fledged broker, like I said, hey, my former company Easter, let me refer you back there. Number two is GPARENCY. No matter what you're doing, don't you want to guarantee the best deal? Mortgage insurance, make sure you're getting the best rate. You buy title insurance, property insurance, that's GPARENCY. I'll help you till the term sheet. There's many mortgage brokers out there, thousands of them, that they don't need full help, but they might want some data tools that we have, just like every good mortgage broker. There's an in-house team that's placing deals. They don't want to go to GPARENCY. They want to do it themselves. They don't want anyone in the middle. That segment. So we're giving out access. We're selling two products. One product is a custom bank list for your deal. So you have that one deal that it's out of the normal box. For $2,000, we'll give you the full list, the same with the concierge, the same people that put the team together, that put the list together for GPARENCY, put together and sell it to any person who wants to buy it. For $5,000 a year, we give you unlimited access to our unfiltered and unconfirmed data, the same database that GPARENCY uses, and with the AI as a starting point, which banks to go to, that same raw database, and then you have a human overlay and deal with it, that you could have access to that unlimited for the year. So this way now I walk into someone and say, you want to go totally yourself? You're a mortgage broker? GPlacer's brand to go to. You want to get someone to shop the deal, work the deal as a broker until the term sheet? GPARENCY. And if you want a full-fledged broker, do you mind if I refer you back to my former company? So it's three distinct brands. It's not one big thing all mixed together. That's how when GPARENCY first opened, that's what people are thinking. And that's GPlacer's. Keep it very simple. Each brand does its own distinct thing. And that's the goal.
Okay, Ira, thank you very much. I really appreciate it. Your family is legendary here in New York, and Jewish people all over the world know your family. Big publishers, ArtScroll. I myself have, many books, Sfarim, in the house. You guys really changed the world when it comes to learning and, just that. I do Daf Yomi every day, and it's always the ArtScroll that gets opened up, and seeing the Zlotowitz name is so special. And you guys are really tremendous. You come from great stock, as they say, and I know you're pivoted more to the business world, and you're doing great there. Like I said earlier, you're legendary, and you're doing things to help people with the investors. Especially the flat fee basis is really nice, and I'd like to see this app being built eventually.
Yeah, so the
That
app
you
is built.
mentioned.
You go right now. It's working. Right
Okay.
now, while we're recording this podcast, it's we're in the middle of applying to get into the App Store. We had a beta users, almost 2,000 users, and over 50% came back a second and third time. And we're getting into the App Store. So when you launch this episode, it should already be in the App Store.
So again, tell us the name of the app.
GPARENCY. If you're going to search GPARENCY, it will be in the App Store. If someone's listening to this and it's not there, send me a message. I'll get you access to it. But I can tell you that, I want to just tell you, you mentioning ArtScroll, so the tongue in cheek is that, listen, I didn't merit to be able to revolutionize the Torah world. Hopefully, I could revolutionize the financing world. That's the goal up here. That's the take that to the end of the movie.
Definitely a worthy goal.
Yeah.
All right, Ira. That's a wrap for this episode of the Wealth Clock with Stephen Weinstock. So if you got value from today's conversation, please take 5 seconds to like, follow, or leave a review wherever you're listening. It helps us reach more people who are serious about building businesses, growing portfolios, and becoming better operators. If this episode made you think of someone to share, please share it. If you know a founder or an investor or a peak performer I should have on the show, please reach out, drop a comment on YouTube, or find me on LinkedIn, Stephen Weinstock. I'm very, very grateful to Ira Zlotowitz for joining us, and I'm grateful for you listening. Ira, have a great day.
Thank you so much.